This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the MAYFAIR Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby PECK Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to a new week. Welcome to the morning call. So we start a new month. It's November, October. Outside gains around the globe, basically. So people are trying to figure out, do we retrace a little bit lower to then have Santa Claus come riding in on his sleigh, or do we just continue this trend that we've seen, since those September lows? So if you look around the world, first things first, you have Asia lower. The PMIs came in, pretty down, not as drastic as people would have thought. You have, I think, the Nikkei is down 2%, the Shanghai is down 1.5%. You look here at the ASHR that we use as a proxy at times, which is the Shanghai. In the beginning of the year, you had this very, very strong trend that, broke out from above the spot we listed on our note and then broke right around 5,200 in the Shanghai. Quick move lower, that's when the world obsessed about it. You had this bounce up, which tried to basically just consolidate again before breaking lower. And then during the last 2 months, it's been more of a tailwind versus a headwind. So at this point, if you look at the Shanghai exchange and you look at this ascending channel here, it is getting a little closer, to perhaps resolving to the downside. You haven't heard much out of this. People have been basically saying China has stabilized. Maybe it has. It's still been in this trend, so it's been out of the danger zone. But I would say if it starts getting below this 3,500, take a little bit of a caution. Basically from here about 3,600 down to where we are now, it's been a little sneaky down move that failed at the 200-day. So it's still somewhat broken and could be in a little vulnerable spot. So we'll watch that. As far as Europe, Europe's up small. We've had a really methodical move here in the HEDJ, which we also use as a proxy. This is ETF for Germany, the DAX. You had your low here. You had your double bottom right there. This is when it took out that 58 that we were focusing on in the Redler All Access note, got above it, and now here it is going sideways again. So the question is, can this flag type pattern give you a move to more upside? And if it does, you'll probably see a little bit of a tailwind out of Europe. And as of right now, if Europe was lower with Asia, our futures would probably be down more. But since it's not, it's hanging in there. And this, 8-day moving average has also been the support system here. So as long as it stays above 60-ish, I think, people are going to try and be constructive on Europe. As far as the S&P, what a move. We've talked about this pattern so many times. Okay, basically, here is your August breakdown. Boom. That's when all the moving average curled lower and you had that big move lower. Then you had your August 24th lows. You had your red dog reversal double bottom retest. Here's when it cleared the pivot. And then basically it's been in an uptrend since. And it's been riding the 8-day moving average all the way up back right into old resistance. So the question is, can we get a little bit of a retracement? I think that even the bulls wouldn't mind that, or not. Last time we came in and took out resistance, it rallied up, held the 8-day, rallied up, held the 8-day, rallied further, held the 8-day. So you did get a small red dog reversal, which is why I'm net short. I haven't been net short in a while. At a 2,092, closing on the lows. If we're going to get a little bit more downside follow through, it's going to have to break below 2,079, and then the 8-day is right here. Okay, so that will be a decision point on whether or not this trend from the lows, which we've seen, stays like this, or do we potentially break this and retrace a little bit more, to then give a 2 to 3% pullback for maybe, a move back to highs. But at this point, looking a lot like that 2011 October move where you had a fast, furious move, and then it could become rangy. So you have to be very specific. And when you're specific, that means you have to see what's going on with all the different sectors. The Qs, technology, best in breed. We'll see if that continues in November. Boom, you have an elevated gap here that got supported most of last week, and the 8 days catching up. So, you can't get too bearish if the Qs hold this 102 and keep this gap open, because then at some point it might even try and get some power and break above this 114.02 into new highs. But you did get a red day, and here's your 8 days. So we'll see if the bears have enough power, if they have any at all, to break it below 113.30. So that's something I would be writing down, in the Qs. This is, first level of support, and then this is real support. Then you go to something like the Russell, which has been weaker, and we're trying to figure out whether or not this inverse head and shoulders pattern, is valid or not. And at this point, it's kind of hard to tell. We talked about this left shoulder right here, being the head, which was also a little bit of an overthrow bottom from those August lows. And then, it built the right shoulder. You had on Wednesday, you had a really big move that kind of gave back more than half. So it's showing you that there's still a little indecision here in the Russell. So you do have Friday's low at, what is this? This is 115.08. Below 115.08, it's right back into the right shoulder and just tells you it's either it needs some time, and it invalidates this breakout, which definitely hurts if you're long and it comes back in, especially if you added to it. I did get a little hurt trying to buy a pullback, but whatever. We'll see what happens in here, and we'll see over time if it builds some relative strength to go again. It's still below the 200-day, it's still below all those moving averages, so it still has a lot to prove. The bios also have a lot to prove. Bios did give us a better trade last week. We've been trying to find some kind of tradable pattern, and this finally broke above this 317 to 320 before giving you a red dog reversal right into the 200-day. From 320, pushed above this 331, peaked out and gave you a little second down day, and now we'll see if this little spot is buyable into retesting this 323 to 320 area. So at this point, though, you have Friday's low, okay, which is right here. That is 324.79. That's your pivot for today to see if they could push it below and maybe come back above, which would be constructive, or not even have enough power to push it below. We'll see. VRX, we're supposed to get a big update from Citron. It's bouncing a little bit because I think the guy said the report's not going to have anything new and earth-shattering, so some shorts are getting a little, I guess, worried pre-market, but I would, not be in such a rush here. This stock, look at this outside day move down, which people are like, how do you see when a trend changes? Well, this was your first wake-up call right here. Then your next one was when it tried to bounce and did it again right there. So, and then it broke the 200-day, right around this 190. So this thing has been very broken well before Citron hit it, which created the downside right here from this bear-type flag. So at this point, I don't know if it's going to break this, this area here. Oops, sorry, hold on, let me bring this down here. But this is your point of references, and because sometimes it affects the bio, sometimes it doesn't. You have the low of 90.46 from Friday, and then you have that crazy low when the news first came out on Citron at 88.50. So see how it handles this zone, and if it wants to bounce a bit and you're in the mood to trade this, first resistance really is like 108. Moving into the banks took off last Wednesday, and it also came in a little bit more than you would have thought if it was going to be like a pent-up big move, to the upside. So with that being said, I'd be a little careful with the banks. Whenever you get a breakout type move like you saw here, okay, you would have thought that maybe it would hold it a little bit better. So it's still okay, but I would say if it gets much below 24, perhaps that would be helpful for the bears to get a retracement in there, and that level comes in right around here, closer to 24. If you look at some of the individual names, you have like Goldman Sachs, failed at the 200-day. I would have thought it would have held in better. You had a nice breakout move Wednesday to give it back in 2 days. So it's either means it needs time. You still have this trend intact, which takes it a little bit closer to here where it would have to hold. So maybe you get some kind of red dog reversals in these banks. The low yesterday for this one or Friday was 187.24. You could do the same thing across the spectrum. JP Morgan, write down where the low was from Friday and see if you sold some strength. If you could actually be a buyer if it happens to take out this low, hold the 8-day and put in a candle like this. Maybe that'll be an entry for you if you're looking for a swing entry in the banks, and go through it with your Citi, with your Bank of America. You could do that with, same concept. Write down Friday's low and see if it holds the 8-day below. As far as earnings season, we're through the majority of it. We definitely have your haves and have-nots, so you have to be very careful. And as it dies down a little bit, you might even have to trade a little less and really, take a look at what the action is. Apple gave us a nice trade. Every now and then it's really nice when Apple gives you a good trade, and we had a really good one here. Remember when it broke above that 112, and then it peaked out here before coming in before earnings, and then you had your earnings gap. Okay, which, I think a lot of us were long, and on Friday I was long. I got out and I actually got a cute short when you had your little red dog reversal into some resistance. So now if you want to just take a closer look here, I'm not sure, what to expect, except for I'm thinking, if this is any good, you probably hold right around this. Okay, so this is key support, which is 118.27, and then I'm also going to write down Friday's low of 119.40. If it trades below 119.40, and hits this, maybe you look to be a buyer there, and if it gives you a red dog reversal at some point, it could be on the move, within the end of the year. I would say people like Red Dog, give me an Apple call for the end of the year. What do you see first? Do you see a retest of 128, or do you see a test of 108? I think I would put a little iPhone to cabase ahead that we see somewhere closer to 128 at some point before year end versus 108, but we shall see. At this point, we have our levels. As far as Google and Amazon, they've acted very well since earnings. Amazon better than Google recently. Amazon, you look at the chart, it's more seasonal for Amazon too. It held its earnings gap, which was right here. Okay, so some guys bought this and just put a stop in. If you did so, you made a lot of money. If you traded it through this 619.50, you had a nice trade also, and then you had a small little I wouldn't even say, a little reversal on Friday, nothing so severe. But with that being said, it's very extended from the 8-day. Maybe it wants to come back and retest this 619.45, which would be right around here. Google showed some relative weakness on Friday with one red day. I'm not sure it's going to lead to another. But again, when things are so extended from the 8-day, you got to be a little careful. This did not take out the earnings high, but it's also not in its retail season. So if Google were to take out this little 2-day pivot, next real support comes in over here. So see what happens. If that starts to happen, maybe it'll create a little weakness across the board psychologically. Netflix, we actually talked about this tradable pivot here for some catch-up, which was right, if you remember, down here. And since then, it's been pretty much grinding to the upside. It filled the earnings gap. So right now, that's behind the stock now. And if it wants to continue to act a little bit better, it's in the game. I would not be chasing it today. But at some point, maybe this descending channel breaks to the upside, but at this point, I would not be just buying it first time today. We'll see if it can hold a little bit. There's not much of a pattern there. FIT, okay, look at this. Been talking about this for multiple weeks, and it's had so many little false breakouts, and then finally it did clear this 38.50 and closed on highs. So your next level comes in around 41. It has earnings after the close. It's up to you whether you need to take it into earnings. I do see commercials. I see a lot of them out there. It's been public for, what is this, almost 1, 2, 3, 5 months. I think this is the second report. If they want to keep it in the game and they deliver, it could see as high as 52. We see a lot of these IPOs that, that first year or so act much better than the second or third year. But at this point, this is your pivot, 42. Then you have a gap fill up to 50, and then 52's resistance. I might trade it after. I'm not taking options into it, but some of you guys who are there for a pre-earnings move, we've seen so many pre-earnings moves, you got paid a little bit above this 38, and now we'll see if you get any follow-through prior. Talking about pre-earnings moves, let's go into Facebook. Facebook gave you a really nice pre-earnings move, which we caught with options and stock. This is when it cleared 94.50 for momentum. This was your red dog reversal. I think we bought options in here. Got it called away on Friday, so I'm flat Facebook thinking about what to do into Wednesday's earnings. If it could pull back towards this spot, okay, before earnings, okay, because earnings are Wednesday, I'll think about maybe buying some 105 calls because that'll be the pivot, maybe do a call spread. We'll see. But, at this point, this ascending little channel here got shaken up, and now you'll see I'll use this pivot, 101.65. If it breaks below that, maybe there's a bit more downside, but I think you should look to be a buyer here if it sees it versus seller. But again, if things get shaken up a little bit prior to earnings. LinkedIn came out, and everyone, everyone's kind of forgot about this one. We listed this on the pivot at 198. This is when it woke up prior to earnings. So it's good that these things are giving you pre-earnings moves so you don't have to take event risk. So that's why you want to start watching whatever stocks you trade probably a week or two before to see if they start getting better. And now I would just let it set up. You have a huge gap here. I don't know if it holds. Look where it came from. But the longer it goes above this gap, maybe there's another trade here above the earnings high, which we talk about all the time. Earnings gap, sideways consolidation, either continues to the downside or it's a little bit exhaustive where it trades below this and fills a portion. So we'll see how that happens, there. As far as oil woke up a little bit last week. It's down a little bit today. We'll see whether it leaks again. The USO has what's it called? A decent igniting bar, which we'll see if it gets supported. Let's go take a look here. This was, the first part of the move, and then you had, your sideways action, and then it looked like it was going to break above, and that's when oil hit 50 to come all the way back, then below, woke up again. So I would say for this to kind of be in the game still, you probably don't want to see it give back too much below this like 1450, and if it holds that, maybe it makes another attempt to get back to the upper end of the range. So at this point, not really a headwind. We'll see what happens today. But also, not exactly a tailwind. The XLE did act a bit better last week, and you still have it, thinking about whether or not it wants to make another move. It's just funny the way it happens, where they break it below the range, and then boom, right back into the range. So now, you do have this flag type pattern here, and it seems as if maybe now if a little sideways work above 67, and then it would help the market if this clears 68.75, because then your next major resistance comes in near the 200-day. So if it were to go from here to there, that would help the broader market. So we'll figure that out. Gold, broke. We had that outside day, which I showed you guys after the Fed, which was your get out of gold card. And if you did so on an active basis, it helped you. This was your trade through, loose and wide. You get out when something like that happens, and boom, right back into, I guess, some kind of support, but it's going to need a heck of a lot of time now. It was acting better, and for at least for gold, and then this candlestick said, bye-bye. Let's see what the miners did. The GDX, same type of thing. You had that, outside type day, or it wasn't actually as extreme, but traded through, closed near the lows, and that was your signal to, take a little care. Now it's back below the moving averages versus above like it was there. So here we are. It's November. Had a huge move in the market since the September lows and the double bottoms. Question is now, do we get some kind of methodical pullback in the first week in November or even into the second week in November to then set up maybe another move towards this level or higher into Christmas? Or do we, hold today and continue the grind? And we're going to have to figure that all out by watching the action in the high beta tech leaders to see whether they hold up here. Watch the Russell to see if that right shoulder starts to break down more. See if the banks find a bid. See if oil holds that area. Connect the dots and figure out whether or not we can make some money to the downside a little bit, or not, and wait to see if we could put some swings back on that rebuild for the market to make us money. Or you just be tactical. Find the stocks that are in play. There's been a lot of them. Make some money long, short. The volatility hasn't been high like it was way back when in August and the summer and September, but there's still active money out there if you don't want to be in harm's way. If you think, the market's set up for some kind of leg sweep. People have been positioning for a market leg sweep for 3 weeks from now, and I spoke to a lot of hedge funds and people out there. They've been shorting this market from 1940, 1990, 2020, 2055, thinking that, this rally is built on smoke and mirrors, but you know what? If you're a trader shorting it for the last 2 weeks, chances are you can't be solvent to wait to see whether or not that's true or not. So if you're following guys that just want to short every tick and have an opinion, make sure they trade real money and not just use ink or a lot of press to try and get their views across without, trading and real money behind it. Because, an opinion is an opinion until the market confirms it. And I think if you remember that, basically you could save yourself a lot of money or at least lose less. Have a great day. I'll see you to recap.